Welcome, everybody. Thanks very much for making the time. The theme for this session is Responsible Digital Finance, Expectations and Challenges at the Last Mile. During the course of our talk, we will basically look into what are the expectations of a last mile consumer of digital financial services, and what are the challenges that we as a group face in meeting those expectations, and what can be some forward-looking recommendations to meet them. If I take a step back, then the journey of digital finance in India has been one that is marked with many bright milestones. For instance, just this year in October 2020, UPI crossed or breached the 1 billion transaction mark. We do know that digital lending is expanding. It accounts for about 40% in terms of volumes of all personal loans disbursed in the country, and about 18% of all value. Most of those that avail of a digital loan, the digital loan is also the first kind of experience of formal finance for people. In terms of serving MSMEs, new age NBFCs, fintech lenders, digital lenders are actually leading the group when it comes to serving new to credit customers. So there's definitely a lot that is going on in digital financial services, and there is something to say about its reach at the last mile. At the same time, there are some disquieting attributes of this expansion, if I can say so. For instance, our ongoing 20% of the 2,700 low-income individuals that we surveyed, about 20% find that it is hard or are anxious about sharing data with online applications because they think that some kind of harm can actually be inflicted on them if they shared data with, say, digital financial applications. And even a bigger number of close to 35% actually say that they do not want to, they are nervous about entering digital financial services because they're unsure of the grievance redress that they will be able to kind of avail of. And 35% of the respondents would actually not approach the financial provider in case of a grievance, but actually approach a law enforcing agency or a local agency instead of the financial service provider themselves. Again, government estimates suggest that a sizable proportion of DBT transfers do not make it to the right account, and beneficiaries are often at a loss to find out where their money went. So on the one hand, we do see that the reach of digital financial services is expanding and expanding fast. On the second side, we do see that there are some major cracks in the system where people are nervous about experiencing digital financial services. And I think the objective for this panel and the question for the panelists today is, how do we make people vote for digital financial services? How do we make digital financial services work for them? With me, in terms of panelists, I'll go in alphabetical order. I have Abhishek Sinha, who is the co-founder of Echo, and Echo is a technology service provider enabling remittances at the last mile. I have Dr. Rajendran Narayanan, who is an associate professor at the Z. Premji University. Dr. Narayanan studies digital finance from the lens of direct benefit transfers and see how it performs in reaching beneficiaries at the last mile. And I have Mr. Sandeep Khojalgi from CII.co, who mentors and incubates startups and has his own matrices of responsible digital finance when he mentors them. I'll quickly open the panel, and I want to first start with a very, because all of us come from such different lenses and such different places in the ecosystem, it's very helpful to go around the house to understand what really is responsible digital finance. Abhishek, if I can open the panel with you and your thoughts on responsible digital finance.
Thanks, Benny. I think, it starts by putting the end consumer as the center of the universe. And that is very important. As an entrepreneur, it's very important for us to make sure that we are putting entrepreneurs right in the center. And it is then only that we understand if one has to build this ability to step into their shoes and understand what is she really wanting. What is she really expecting out of the service? So I think the most important thing is to place the customer right at the center. and start thinking from there. Mostly when we look at implementations, technology takes the precedence and we start to put out the tech solution first. And it's largely the implementation, if you would have observed. And the reason why we see so many cracks appear is also because it's a bit of a top-down approach. And most of us are guilty of that. Uh, because it helps us get started. There is this tendency with entrepreneurs to get something quick and dirty out there, get it tested, and somewhere if you're not conscious of it, then you will continue to create mistakes. So I think very, very important is to put the customer as the center of the universe. And then I think the second aspect is to understand. I go back to the paper from Ignacio Mas, where he talks about how it is important to measure the gap in the income, measure what it needs for them to maintain continuity in their lifestyle, and the what if situation. So if one is able to get enough data around these three aspects of an end consumer, then one can offer her the right set of products. So one is when you put the customer as the center of the universe, you definitely make sure that the user experience is smooth, and then is the relevance of what we are truly trying to solve for the end consumer. That comes from the fact that if we are able to get data around these three aspects, then across savings and lending and insurance products, we're able to offer the right combination for the customer to solve for her gap in the income, for her continuity in her lifestyle, and dealing with the what ifs. So these two aspects for me is very important, and shows. I mean, that's how I would define access to responsible digital finance.
Sandeep, you also aim to provide financial services at the last mile. How would you define a responsible digital finance?
Thanks, Penny. So we as a program, the Bharat Inclusion Initiative, we support startups that are building for some of the lower income populations, both in urban and rural areas. Right, and typically we help folks that are in the very early stage, which is maybe a prototype or having their early customers. Now, at those stages, startups definitely are quite resource constrained, right? They have to make do with whatever is the best that they have. And there is a need for them to focus on one specific customer or sub segment of the overall market. And that is where our approach lies. And when we are probably sitting with the startup, helping them refine their solution, one lens that we always wear is around the financial health of their target, and which is quite important to us. It's important to ask.
Sandeep, sorry, your voice is fading out.
Okay. Is it better now?
Slightly.
Okay. It is important to ask the question, is the customer really better off using your product, not just now, but over the longer term? Or are you just doing it because you want to make profits? Right.
That's a very interesting take. So what would this better off, if I were to unpack, how would you measure better off? Are there any rough qualitative, quantitative indicators?
Right. So when we look at the indicators, right, there are indicators that measure access, right? And an example would be, let's say, are you really serving new to credit customers, or are you just giving out loans to folks who already have access to those loans, right? Is your customer really a first-time insurance buyer? So they otherwise don't have a protection, but are you enabling that? So there are certain metrics that you can bring in. Probably not the most accurate, but at the same time, you have to, ensure that uh, that focus on financial health is also there. One important, for example, let's say you look at credit. Uh, it's uh, important to ensure that the customer is not, let's say, overdebting, right? And I mean, and the way the approach is very clear. I mean, if it's not good for the customer, it's not good for your business.
Yeah.
That's how we look at it. Yeah.
Yeah, maybe during the course of our talk, we'll come back to this and see how we can get into the weeds of identifying over indebtedness. But I turn to Rajendran, and I know, Rajendran, you've been looking at digital finance from a very different but equally important lens, which is the failures or how to minimize failures in service delivery and in benefit delivery, especially when it comes to entitlements. How would you define responsible digital finance?
Thanks, Penny, and thanks, Abhishek and Sandeep also. It's important. I think I agree with one of the things that Abhishek mentioned is putting the customer at the center. In this case, I come from the perspective of working on direct benefits programs across multiple programs that the government of India has. Not just government of India, but even different state governments have been in their DBT programs. For example, the wage payments of NREGA or maternity entitlements or scholarships, etc. They are all happening through the digital payment, the DBT mechanism. Now, I think it's one of the things that I would emphasize as responsible digital finance is even the nomenclature. I think it's important that a person who's receiving an entitlement from the government recognizes that it's a right and not a dole, because all these things are happening under the constitutional provisions of right to live with dignity, equality, etc. So I think the putting the rights holder at the center of the discourse of any kind of DBT is very critical. So much like how customer needs to be put at the center, although in some sense the rights holder who are recipients of DBT, they are customers of the bank. But I think the terminology is important, that they need to the entire focus should be treating them as rights holder. And even the terminology of beneficiaries, it's a little loaded. So somewhere I think we need to transition to think of even the terminology, because once you have the right terminology in place, I think that would shape the politics, and that would shape how we view this entire architecture of DBT, etc. So the important, I think I would like to just there's a wonderful book by Cathy O'Neil. She has written this book called Weapons of Maths Destruction, which I'm very fond of. And one of the things that she outlines is that the twin purposes of fairness and efficiency, they need not be aligned. Democratic values and constitutional rights are typically anchored on the principles of fairness and justice, whereas many times implementation of any kind of technology architecture, it's geared more towards efficiency. So, and in that sense, technology will try to minimize inclusion errors, will try to eliminate minimize those kind of errors. Whereas from the perspective of the people, if you anchor it in democratic principles, then the function would be to minimize exclusion errors. So I think that's where the trick comes in. How do we balance the two things? And just to quote Cathy O'Neil from her book, she says, fairness is squishy and hard to quantify. It is a concept, and computers, for all their advances in language and logic, still struggle with concepts. Programmers don't know how to code for it, and few of their bosses will ask them to. So I think this is somewhere at the center of what it would mean to say responsible digital finance in the context of DBT and in the context of rights holders perspective. So I would just end by saying that any system of any, let's say, digital financial system as well, it needs to be designed, there needs to be a human-centered design, much like what both of them have individually said, Abhishek and Sandeep. I'm just adding on to that is the design must be human-centered, and at the same time, it should enable democratic participation at the grassroots better, so that the political stake that people have, the political capacities of people should increase, and digital architecture should not be alienating to the people. It should be an enabling. So I would frame responsibility of the digital finance architecture in this manner.
Thanks, Rajendran. I think two important things that map on to both the provider side here are when Rajendran articulates democratic participation. I think from the provider's end, an equivalence would be that the consumer is able to participate as an equal, and the consumer is actually able to avail of digital financial services without some kind of a hesitance in that manner, and asymmetry in bargaining power in that sense. And that's where I'm coming to next, that Rajendran made a beautiful point about the entire architecture being designed in a way that upholds a user's dignity, regardless of if they are citizens in the capacity of beneficiaries or citizens in the capacity of consumers. So when I come to the architecture of digital financial services, India has some striking elements which are probably unprecedented in the world and are also setting kind of are trailblazers in their own rights. This is the India Stack, the UPI. We have seen all of this, but we do see that the exclusion remains high and rates of exclusion are somehow still visible. This was, I think, most potently visible in the case of AEPS, Aadhaar-enabled payment services. So at the peak of the lockdown, when physical movement was restricted, most of the government benefits were being transferred through AEPS. Transaction failure rates there were quite high in the months of April and May. This basically had a direct impact on how quickly citizens could get access to their entitlements. And it showed some kind of underlying cracks in the system itself. Can I turn to both Abhishek and Sandeep to what they think the state of infrastructure is, and if that is a risk at all for digital financial services?
Sandeep, you want to go first?
Sure, let me do that. So I know, the infrastructure is something that everyone cribs about, right, including us. But then I agree that we are definitely much better off when compared to a lot of other people in a country. However, I will definitely say this, that the stack and the infrastructure itself, we are still just getting started, right? In a sense, I'd say there has been a generational change even in the infrastructure that we have had, especially for both financial transactions and other systems in general. And that is really the way things are built, right? The example, the comparison that I would typically make is that of a civil infrastructure, where we say that, okay, you first build a flyover, test it, do the complete testing, and then let people over it. Tech is not built like that. You do build a system, something that's working, and then you let it out, you learn from it, improve upon it, make it a lot better. And then over time, you come to a system that really works for everyone. There will always be people who will be left out. And it's not just true of financial system, but I'd say it's true of probably any system out there. Even something as ubiquitous as an email will have people who are left out of it, right? And it is important to ensure that we are taking their needs into consideration. But that's, I think, maybe the way to do it would be to have an alternate channel which will serve them, at least until we are absolutely sure that this channel that we have reliably serves, I'd say, almost 100% of the population. It may not be happening now, but I'm still quite hopeful that we are going to do much better in the years to come.
And what would some of these alternate channels look like?
I think in the current sense, right, the traditional channels that we have are going to be the ones that are already there, are the channels, the offline channels that we have. Probably we need to rely on them, at least for a certain segment of the population. But the endeavor should be to, really move things fast digitally so that we reduce the dependence on those channels.
Okay, Abhishek, infrastructure, does it pose risks? What do we need to do?
I think see what generally happens, and the risk of doing this is that you can't take away the benefits of the evolution which has happened in the payments infrastructure in the country, right from 2009 onwards, when NPCI got set up and Aadhaar got set up and stuff like that, and it has been incredible. But that's a very but it's important to compartmentalize the success, and because success is and we should acknowledge it as much as we can, but it's equally important to take the issue of the customer bottoms up, and that does not mean that I'm critical of the infrastructure. And this is a narrative which largely gets misinterpreted when you start to stand for the customer. And by the way, we face this right internally in our companies, where if we start to speak for the customer, then people, my colleagues who have done wonderful work on the infrastructure will say, oh, are you saying we have not done enough? And so I think it's important to compartmentalize, and it's really important to take the customer issue in its right earnest. And that's what we fail to do, is that we are not measuring the exclusions which is happening, and we are only, because of the wonderful job at the nation's level, at ECHO's level, we do with our tech, we are only bothered about measuring the success part of it. And that's a big miss for all of us, including I think that's that sensitivity or empathy has to be built in within the organization, with everyone involved. And I think that big piece is missing, because when I start to become critical, then I start to get questioned that, okay, are you saying we haven't done enough? So these two arguments are not at conflict with each other. I think it's important, and we are facing this quite a bit, is that when we start to give feedback, then we are confronted that, okay, are you saying that we haven't done enough? And we need to be very sensitive that that's not really what is the counter argument.
Yeah. So I think while there is a wider acceptance that the consumer needs to be at the center of the product design, the consumer at the center of the infrastructure design is still a more niche argument that needs to be made more broadly, I feel. But also that these two operate at very different levels. The consumer operates at the individual level. When you design the infrastructure, you design for the scale of it. But ultimately, the two must kind of reflect each other's requirements. Rajendran, if I can turn to you, in your experience, what are some cracks in the infrastructure that are basically causing exclusion at the last mile?
Right. So one of the things is the nomenclature. Again, my entire perspective will be from the context of the rural lens, so I'll focus on that. DBT has been existing from 2010-11. So when money was transferred directly to the bank accounts of NREGA workers, etc., that's been happening. But earlier it was not an Aadhaar-based transfer. The transfer was happening through your standard account-based transfers, which is you take the IFSC code of people, bank account number, name, and the money is transferred to your account. NEFT transfers. Now, then slowly from 2016-17, what you see is a little before that, maybe the APBS architecture has come into place. Now, the Aadhaar payment bridge system. So in the APBS architecture, the Aadhaar number of an individual becomes the financial address of the individual. So all you need to know is the Aadhaar number. Now, let me just walk you through maybe 2-3 steps of how APBS works in the context of, let's say, a NREGA worker. So the NREGA worker has to submit her Aadhaar number and job card number and the bank account to the block office. And once that's done, the local NREGA office then updates the Aadhaar number to her job card, and then also links and then her Aadhaar number also needs to be linked to her bank account, to which the NREGA payment will come. Now, once she completes one round of work, the block office will generate a funds transfer order, and that will be sent to the central government and that will contain the Aadhaar number of the individual. Now, the payment order, the funds transfer order, then goes through the PFMS system, which is a public fund management system. And then PFMS will send it will be sent to the sponsor bank, which is where the government holds its money. And then the sponsor bank will send an electronic notification to NPCI, which actually operationalizes the payments. And at the NPCI server, one locates the which bank the Aadhaar is mapped to through the institutional identification number of the bank. Now, once that is identified, the payment order reaches the concerned bank, and then it searches for the bank account to which the Aadhaar number is linked, and then the money is transferred. So this entire architecture, this is your APBS architecture. Now, the thing is, when things are going fine, there is no problem at all. Whenever there is a problem, so one very common thing that happens is there is a payments get rejected, or there is a rejected transaction. And that rejected transaction, there could be many reasons. One could be just a data entry error at the block level, but there could be other complicated errors, something called inactive Aadhaar. Now, inactive Aadhaar is a more complicated idea, and I can talk about it later, but I'll just bring it up for discussion right now, is that inactive Aadhaar is not that your Aadhaar number is inactive. It's not that the Aadhaar card of an individual is inactive, but it's a technical problem that happens at the mapping level with NPCI. Now, when these things happen, typically rural banks are extremely short-staffed and super overcrowded. Consequently, when a person goes to, let's say, withdraw her money, and in the event that her payment is rejected, I can talk about a specific case if I have the time. So there's this person that we have written about. We released a report on last mile challenges just in November, and one of the persons over there, Sheila Devi, she is from Jharkhand. Her payment got rejected. Well, okay, Sheila Devi's case is different. I'll come to that later. So, but the whole point I'm trying to make is the inactive Aadhaar issue is a problem that happens at the NPCI mapping level, but neither the local bank officials nor the block officials are aware on how to rectify these payments. In fact, when an RTI was filed by an activist from Jharkhand called James Herinch, that RTI was filed first with UIDAI, understanding what is inactive Aadhaar. That was then routed to MORD, Ministry of Rural Development. That was then routed to the government of Jharkhand. Then it went in circles, and finally it came back to, it was originally filed to MORD, then UIDAI, and then finally went back to MORD because there was no resolution. No one knew what to do with it. In fact, I, along with 3 other people, we met with NPCI officials and RBI officials as well to understand what inactive Aadhaar is. And when we met at that time, also the understanding of inactive Aadhaar was not clear for NPs because it's a code that's generated. So the thing is, when this is one of the main reasons why NREGA payments are getting rejected in the country today. And we're talking about 1 in 20 transactions in NREGA are getting rejected. And the worst thing is those people whose payments get rejected, all their subsequent payments would get rejected in NREGA. The other thing is the ramifications are not just in NREGA, but across DBT platforms. So whether you're doing a PM Kisan cash transfer or whether you're doing a maternity entitlements, in the event your payment is rejected, it's going to be all your subsequent payments will get rejected. So what I'm trying to highlight in this is that the architecture, when it's working for an individual, it's great. But for those, when it's not working, there is no mechanism by which people can understand where the error is, what to do in the event there is an error, and who is accountable for these kind of errors. What should they be doing? Because there are, in the event of NREGA, for example, the act mandates that you need to get your wages within 15 days of completion of work. But when your payments get rejected, they get rejected for 8 months, 10 months, 1 year. Now, who is going to pay the delay compensation for the period that a woman has not got her wages? Because it's a life and death situation for many of them. So a very strong accountability framework is required for the architecture. And one of the things that needs to be done very impartially is a technology audit of the architecture itself. And that technology audit needs to be put in the public domain. We need to have multiple kinds of people being participants in the technology audit. and the results should be put in the public domain for people to see, assess, and then give feedback. So that entire feedback loop, auditing structure, accountability framework, that needs to be put in place in the architecture itself.
And this is just for the money coming in.
It's just for the money coming in.
There's a leg which also has equally a large number of challenges where money is going out. But I just want to take another 30 seconds. I think this audit thing is very, very important. As entrepreneurs, we are not embracing enough open source. I think open source is a very good answer for audit, and especially when something is commoditized. These rails are pretty much commoditized. There is no exceptional IP which is getting developed here, and so at NPCI's level and even at enterprise level, like one agenda which I am big time pushing within Echo is to say that if this is not an intellectual property to be protected, then let's make it open source. Because the next innovation may actually happen on top of that open source, and it's a very, very good audit mechanism. So that's just one small point which I wanted to add.
Do you have thoughts on this?
Yeah. So as I was hearing Rajendran, what I also felt was about how the people, the policies, and the processes can sometimes actually help in overcoming the limitations of technology. In this case, for example, I think if there's always this opportunity to be agile and to when it comes to solving these problems, right? So yes, it is expected that when you take a technology to ground and implement it, you will always face those challenges. I think the more important thing here is about how you respond to those challenges, the issues that come up, and how proactive you are in solving for that. And maybe that's where the answer lies, right? Technology must be improved, but only if there is a very strong intent to, I'd say, solve for those issues as soon as possible.
To my mind, Rajendran's whole description of the problem, and just to add on to that, in our analyses, we uncovered a similar problem. That analysis was in great parts thanks to Abhishek himself. This was during the AEPS transaction failure surge during the pandemic. And when we spoke to staff on the ground from Abhishek's team, we understood that a lot of time consumers received error codes, and these consumers actually came to the correspondent, and the opportunity cost was a day's wage. And the lines were extremely long in the days of pandemic because branches were not operating at all. And then they would get error codes which neither the operating correspondent would understand nor the consumer would understand. And those codes were really ciphers, right? And then when you don't understand what the problem is, you don't know where to go and rectify. And then there was some other very seemingly, to my mind, and I'm not a technology expert, but they seemed like very obvious points for digitization, but they hadn't been digitized. For instance, we came across a problem of chargeback, that if you didn't really, if you had to put a charge back to your account, which is to say that your money was stuck, you were sending out money, your money was stuck, it didn't reach the other end, so it needs to come back to your account. Those kinds of grievances could only be made by visiting a bank account. So a bank branch, I mean. So while those transactions can be enabled through a POS at a BC, if a grievance in those transactions arises, then a person is expected to visit a bank branch, fill a form, and most of the branches, like Rajendran said, are crowded, and the staff does not even know what a chargeback form is. And then they have to again call the ground staff of Echo, understand what a chargeback form is, and sometimes these guys are helping them out to fill the forms. So like this was one limb of the transaction that could have been digitized, that from the same POS machine, can you not register a grievance, and that same process not be made as easy as remitting money? So I think that's a question that I will come to with all of you that why is it that we have left out these portions of the transactions when they are the ones that clearly have a disproportionate effect on the consumer's psyche. It's to avoid events like this that women migrant workers still continue to go to a person to remit money home instead of using an app because they find that there is a person on the hook and they're willing to pay a higher premium. This was a small qualitative research we did in NCR. And it is basically the inability to, like Rajendran says, hold the system accountable, which is then not letting us dislodge traditional finance in some sense. So why do some of these frictions exist? Anyone wants to go for it first?
I think one small crack is also the fact that we are looking at metrics completely top down, and we are not. In which forum are we really trying to collect feedback or anecdotes from the ground? That very thing is institutionally missing. Everybody is asking for top-down numbers, whether it is within the organization or, let's say, at the government level. And so what is happening is that we haven't created a very effective mechanism to listen to the voices of the ground. And that's not effectively flowing back. What is flowing back is just the numbers which is being seen completely top down. And top down, the problem is you know everything then becomes a small number because the scope, the project itself is so big. But as Rajendran said, and it is very, very important to understand that for that customer, her livelihood is at stake, and hence a lot of things are at stake at her end. So I think this is one small point which I definitely want to bring up, is that we don't have an institutional way of listening to the voices of the ground.
Sandeep, are you in your investments among startups tackling this challenge a little differently? Are you using technology innovatively to see how you can either facilitate these legs of transaction or crowd in feedback? I'm sorry, you're not audible.
I can't hear Sandeep at all.
Yeah.
Maybe Rajendran can probably speak, and I'll just change my audio and I'll just return to this.
Sure.
Yeah, I think I completely agree with what Abhishek said. For example, actually the word audit itself is a derivative of the Latin word, I think Latin or Greek, audia, which is to hear. And that's where we get the word audio as well from. So audit, unfortunately, the word audit has assumed a meaning where we say that, oh, we are going to come and we are going to scrutinize you and find faults and say you are not doing your job well and penalize you. Unfortunately, audit has come to mean that. However, if we actually be true to what the meaning of the word is, and if we are true to the meaning of the word, then we are following the kind of principle that Abhishek is alluding to, which is listening to voices from the ground. And when I say voices, it's not just the voices of, let's say, the DBT rights holder, but also the voices of the banking correspondents, voices of the people who are running the customer service points, block officials, bank officials. Unfortunately, there is no, and each one has their own set of problems. It's not that, unfortunately, it should not be misconstrued that any person, any official operating at the ground level is going to screw the customer, is going to charge commissions. Not everyone does it. There are some people who do it, but it's unfortunate that everything is painted with the same brush. There are constraints that DCs face. For example, I think in April, May, I forget the exact time, because it was peak Corona period in Bihar, there was a BC who died, not because of Corona, but because of the fact that some persons' transactions, AEPS transactions, were repeatedly failing. And at some point, they were so aggrieved because as it is, there was no food. It was lockdown period, no food and no money, no income. Income channels had stopped. Their only hope was the existing money that was in the bank they wanted to withdraw. But when that didn't happen, there was a sort of mob incident that happened and the BC died. So there are no protection measures for BCs that are operating on the ground as well. So we need to understand their constraints. For a colleague of mine, Sakina, she had done a study with another person called Nicholas in Jharkhand, and they had studied they had interviewed a bunch of bank officials to understand what is their understanding, officials' perspective of the architecture and what they do when things don't work out. And what it turns out was most bank officials were unaware of these architectures. Most, even bank officials, the error codes that you talk about, bank officials were not aware of it. They were not privy. So we, before rolling out any kind of technology at a large scale, I think it's very critical to do piloting in small scales, learn from those pilots, and this is what Sandeep also said earlier, the way tech needs to be thought of is it needs constant iteration. And if we combine that iteration based on relevant feedback of all the stakeholders on the ground, then we can think of a more meaningful, a more broad-based technology implementation where scale is not compromised, but at the same time, exclusions are also taken into account very seriously.
Rajiv?
On technologically, where we miss these things is the fact that you'll have very good APIs for the transactions, but you'll have no APIs, the customer support, and the customer support is working on Excel sheets.
Correct, exactly.
And that's that leads to, and that's, so I think one very important point which Rajendran is making is the lack of preparedness. It is not that APS was a new system which was getting used. It was a system which we had already used, and some of the challenges were known. But there was no mechanism, or there was no, let's say that, did we have a session with our sponsor banks saying that, okay, now that this is going to happen, let's just discuss the challenges? I don't think so that ever happened. Or with the banks and NPCI. So some of those gaps were there. There was definite lack of preparedness. We were aware that some processes were Excel sheet based and not API based.
Yeah. So, I just want to highlight this point. I hope I'm audible now. Yeah. So, it's like, if you look at COVID itself, right? It's like getting a question paper where a lot of questions are out of syllabus, right? And a system that was maybe working at 2x suddenly had to manage a load of 10x, and that always creates problems. And suddenly maybe it was a system that was ready, but when we are talking of the system handling 10x, suddenly it became a work in progress system at that point, right? And by system, I mean the entire thing, right? From the technology to the communications, to the processes, and most importantly, I think what both Abhishek and Rajendran highlighted, also the education of both the providers and the end customers. I think one thing that is definitely missing, or maybe it has been underestimated, is the need for education, of the people who are delivering that service. And if you can do a good job there, I think at least a few of the problems that we are seeing right now, at least we could solve a good number of those problems. However, I will still say one of the challenges is when someone is building a solution, and especially it's a for-profit entity, you tend to go after your most profitable customers first. You want to solve for them, you want to make the experience seamless for them. And this also means that you miss out on, solving for those who are probably not your focus customers right now. And this can also be a reason why, we are seeing some of these issues. I agree that a system like an AEPS, which is more of a public system, should really take care of this. But maybe it's really the approach that needs if not an overhaul, then at least a tweak to make it work for everyone.
Okay, just latching on to Sandeep's point, I think so far the discussion has really focused on what are the technical or technological causes of exclusion. The second point that he brings are almost idiosyncratic or cohort specific causes of exclusion, which he says that there is a tendency to run behind your target customer segment, however you define that target to be. So I want to understand from each of you that when you think of exclusion, what is the face of that exclusion? Is it a migrant worker? Is it a woman? Like, where do you think is exclusion happening the most? And in your businesses, are you, and as far as Rajendran goes in his observation of how the system is behaving, are there any specific steps that have been taken to kind of bridge this, specific exclusion crack, so to say? So I know, Abhishek, that on the pre-call we spoke about how the prototype continues to be the most common user out there, which still continues to be a man. Do you want to speak more about what the prototype is and where do you think is the most possibility of exclusion, in your services?
We have seen this play out right from when we started way back in 2007, and very clearly broad brushing it that the low and moderate income customers still face a lot of exclusion. And let me just jog a bit into history. When the business correspondent model came into being, we were like islands. So we could be partnering with X bank, but we were still not integrated into their core banking system. So the customers whom we acquired could only transact in that small island. And hence it was extremely irrelevant for that customer. So what was getting denied to that customer, as Rajendran very aptly worded it, is the rights. It is my right to be able to, if I'm a banking customer, it is my right to be able to transact with any other bank holder in the country. And hence all the options should be open for me. And at least the access to the options have to be available. Some options may be very, very low cost or practically free of cost. And some may be at a certain cost. So very clearly, some of these things were denied, and an exclusion largely happens because, again, it's a very top-down approach where the bank says that, okay, I'm a big bank, I'm happy to be an island for some more time because most of the customers are with me. And I will not integrate with IMPS, or I will not let the BCs integrate with the core banking system, and so on and so forth.
So that's exclusion based on
clearly. And within this set of customers, I think it was somebody from World's Women Banking, is that the name of the organization? Who said that, whom have you designed it for? Is it a female customer? And we said that, no, we haven't taken male or female into consideration. We spoke to customers and we have designed it. And that's when she opened up my eyes to say that that's actually when you are not designing for women, you're actually designing for a man. Irrespective whether you're not alert to that reality. And the brutal reality is that in Echo, so far we haven't yet designed for women. And that is, if there is any argument to that, then I will have to fall back on what Sandeep just said, which is I am answerable to the shareholders, and hence I'm going to look at the most profitable customer and solve for them first before I start to solve for others. One last point. So I haven't, for me, it is largely anecdotes, and we haven't done really primary data to find out the exclusions. But pandemic was one where I ended up speaking to a lot of our customer service point owners and these entrepreneurs and the end consumers. And very clearly there was, this is not the first time we have faced exclusion. The same customer faced huge amounts of exclusion during demonetization. For them getting access to, getting, there were instances where we were forced to take the old currencies because there was a medical emergency, and the CSP said, I'll deal with it. You may not pay me, but this fellow is right here crying and has a medical emergency. What do? I can't say no. And so one has to live with these realities. And so pandemic really brought this out quite a bit. What we are seeing, basis again, some very anecdotes I have collected through my phone conversations, is the fact that women are absolutely at the receiving end of this exclusion, because right now their jobs and their incomes remain a lot more impacted than their male counterparts.
Right. So Abhishek made an interesting point about being answerable to shareholders. So Sandeep, as impact investors, is there a way that we can shape this or start at least pushing the needle on this and saying that criteria, breaking down the whole impact into criteria of inclusion and saying that these matter, and I leave it to you to decide how much they matter in relation to the bottom line, but these matter and these should be pursued. Is there a space for doing that? Are you able to do that in some of your work?
Right. So I echo Abhishek's thoughts on the need to balance shareholders' interest with impact. Ultimately, impact investors are investors first, right? If they have a 100 million pot today that they want to invest, and tomorrow they want to maybe raise a 500 million, they have to prove that they are providing the returns for that 100 million, right? So to that extent, the returns that they seek from an enterprise, from that they invest in, that's really non-negotiable. You have to show that interest. Otherwise, it's going to become difficult to raise from the market again, right? Secondly, when I look at the impact angle of it, right? Definitely, the way I've normally seen it is that investors do ask of certain metrics, right, from their investee companies. They do check whether the mandate with which the investment was made on serving, let's say, saying that a certain X percentage of your customers that you serve should be from, let's say, a low income background, right? The intent in some way is to ensure that you don't build systems in such a way that they become irrelevant for the underserved or unserved communities, right? I think that is the philosophy with which many of them are going right now. And our metrics asks, yes, they are definitely given importance. I'd say primary importance will still be to the sustainability of the business and the return. But at the same time, what we've also seen is that typically when impact investors do come in, there are also other investors, I'd say co-investors who are maybe not really so much focused on impact. And that does dilute the purpose of it.
Okay.
But it's really comes to, are you really supporting the right kind of business? Right. That's why I look at it.
I think one question that has always kind of puzzled me, and I know you guys know better, is why do we have to make a case for inclusion, right? Inclusion simply means more business. And I don't think that more business in any books is bad. So why is it that we have to kind of take the whole impact investment route towards inclusion? And why is inclusion by itself not thought of as a business expanding strategy and therefore an objective that comes to entrepreneurs naturally?
With a quick answer to that is that technology itself is helping us solve it, especially data-related technologies, and in a country like India, using a lot more video, voice, and vernacular mediums to reach out to the customer and to listen to the customer. These technologies are today available at much lower cost than what it was available even, let's say, 3 years ago. So technology in itself is helping us solve inclusion, because I think this is a very, very strong point you make, is that it is business friendly argument.
Okay. Rajendran, if I can turn to you now, when you read the delivery of benefits and when you study that field on the top, when you study the topic on the field, are there any groups that are disproportionately disadvantaged, some that are more vulnerable than the others? And to your mind, what are some ways that we can quickly address, not quickly, but address that exclusion there?
Yes, I think again, borrowing on from what Abhishek earlier said, I think women tend to be definitely more excluded. Because I think the fact that women have a bank account that's not been there traditionally. So the fact that they have a bank account now, it's a very new concept. I mean, new in the sense in the larger scheme of things, if you think about it. So that definitely is, and I can, this is again, we've documented several of these cases. And one of those cases we've documented in the report that we released recently is this person from Jharkhand who's, according to the NREGA website, the money was credited. The status, according to her particular work, showed that the money has been credited in her account. And the money is about 4,200 rupees. But when she went to withdraw from the bank, the person at the bank said, your money has not come. And passbook update is definitely not a priority for people at the bank because there's so much of crowd. So passbooks very rarely get updated. So and then after a lot of going to some local organizations, to a Sahayata Kendra, which is assisting workers in getting NREGA work, etc. So they then took the person to the bank, and then I had the passbook updated, which said the money has not come. So when the issue was taken to higher authorities at the district level, the officials tended to believe what was on the NREGA MIS, which is the money is credited, but were not willing to agree to her point of view. And she lives in a faraway village. Her village is about 15 kilometers from the block, and going to the district is, she had to make multiple trips. So the belief that officials have is that they believe the technology as opposed to what the woman is saying. And she was steadfast. She is saying, I worked, this is my money, I don't want to lose it. And it so happened that the money was actually credited to someone else's bank account. But finding whose bank account the money was credited, and then once it was found that it was credited to someone else's account, the onus was on this woman to go to that person in whose account the money was credited and go and communicate to her that, look, it was my money, but it's gone to your account. Please give me 4,000 rupees. It's a nightmare. And a worse thing happened is something that we worked on very closely with 2 women in Simdega district in Jharkhand. Both happened to have the same name. They had their bank account, they were from different panchayats, but both of them had their bank account in the same bank branch, a Bank of India branch in Bano, which is a block in Simdega. And what happened was they were both using AEPS through a CSP, very honest, wonderful CSP. And one of them, she had about 53,000 rupees in her account because her husband was working somewhere else, and through remittances she had that. And the other person was building her PMAY work. So when she went to withdraw money from the CSP, she was waiting for her PMAY, Pradhan Mantri Awas Yojana installment, which was roughly to the same tune of about 50,000 rupees. So when she entered her thumbprint at the POS machine at the CSP was able to see that, oh, your 53,000 rupees have come, you can withdraw. And she withdrew that money in 4 or 5 installments. But it turns out that the 53,000 rupees was actually the other person's money. Now, when we went to the Bank of India, it turns out that, again, it goes back to the Excel sheets, maintenance, and so on. It was after a lot of digging and after raising the matter with the ombudsperson at the bank, it was found that the customer Aadhaar numbers are different, bank account numbers are different, but the customer ID of the two people at the bank was the same. So even though it's a mystery that if you're routing the money through Aadhaar, then why does customer ID that's maintained locally at the bank, why should it matter? It's a question that is still unanswered. But the thing is, again, the brunt of it was borne by the two women. And when we did a workshop in Ranchi calling state officials and other people, both the women came, and one of the women had a very strong statement to make. She said, ungli meri hai, machine aapka hai. अगर पैसा किसी और के खाते से निकल गया तो गलती किसकी है? उंगली मेरा वही है, मशीन आपका वही है, तो आप बताइए गलती किसकी है? And no one, again, it boils down to the same question. But just going back to that, I think women, especially Adivasi women, because of the location, because of the lack of habit of doing financial transactions historically, they definitely tend to get more affected. And in other places, for example, in Rajasthan, what we noticed is that a majority of the women, when, again, there is a caste hierarchy that plays a massive role there, women, they don't operate their own ATM cards. So even if their money is coming to the ATM pin, etc., is held by the man of the house, or they were, or whatnot. So they go on behalf of the women to withdraw money. So although they have an account, they have an ATM card, the agency is still not there in withdrawing money. So these are some, definitely women and women from marginalized communities like Adivasis or Dalits, they face a lot more.
And that also brings out one more facet of exclusion right here, right? I mean, we all know how algorithms are able to do risk-based pricing better, and we're able to reach new to credit customers. But so many of these algorithms tap into data of mobile phones, how frequently the mobile phone is taken out of the house, the number of calls that are made. So for a woman's mobile phone, those matrices are going to be very bleak, and they may not actually reflect her actual credit worthiness. And we may be quick to jump to conclusions, and there our risk-based pricing may need to actually be very alert and sensitive to the underlying structural and societal norms that are shaping the use of digital media, the use of mobile phones, and use of financial devices and instruments as well.
Yeah.
So, yeah.
If I may just add one point regarding mobile phones, I'll just add that point, I'm sorry, is again, the mobile phones, women generally, it's becoming a thing now, but once again, the mobile phones, there's one mobile phone in the house which is typically held by the man. So even if there is an OTP or anything of that sort, it's, in fact, there was another woman, in order to get pensions, she was told that you have to buy a mobile phone because you need, if you don't get a mobile phone, you won't get an OTP. So this 65-year-old woman, an old age pensioner in the Santhal area of Bengal, Jharkhand border, she went and bought a 2,000 rupee mobile phone so that she can get her monthly pension. Sorry, I didn't want to interrupt you, but
no, not at all. I'm very close to the last two questions, but I think I'll take a pause here and invite questions from the audience. If there are questions, please drop them in the chat boxes and they shall be relayed to the panelists, and we'll be happy to answer them. Just picking from where you left, Rajendran, then, women have a disproportionate effect, and just the whole point of patriarchal norms or dictating or mediating women's use of technology. I think very recently one of our work is still ongoing, and we've just received data yesterday from it, and that work actually looks into how women use mobile services and then digital financial services. As a precursor to that work, we did a review of the Global South, a literature of the Global South on women's use of mobile phone, and we understood that women tend to have more obsolete hand phones. Even when they have the same handsets, they tend to use fewer features, and whatever features they do use, they are still prone to very, how should I say, to monitoring and censoring by patriarchal counterparts. So I think that when finance seeks to break this exclusion and seeks to reach people, it should not really rely on education and consumer education so much as it should seek to meet people where they are in their social context, because there are barriers that technology will not be able to solve, and barriers that will go away only with time and maybe over generations. And if we are not sensitive to those social norms that are dictating the structural divides in the society currently, then I think what digital finance risks doing is it risks either papering over those crevices or maybe even entrenching them further and never really accounting for that person who's not able to use mobile as the algorithm dictates they must. As I come to this, the second point that I've heard from the group again and again in different tones is just the importance of feedback and the importance of grievance redress. It looks like that a lot of customer trust issues can be allayed if there were strong grievance redress mechanisms. So can I quickly go around the house now and see what would good grievance redress look like? What are some specific measures that you have taken or are seeing others take to provide for grievance redress? What works? Before we kind of go into that discussion, I just want to go over some of the statistics that I said earlier at the start, that we are currently completing a survey of 2,700 low-income, peri-urban and rural individuals. The survey is on informational privacy, but we asked them very specifically about digital services and their experience of grievance redress. And in the context of financial service providers, only about a little under a quarter said that they would ever go to a financial service provider for seeking redress, and 35% said that they would much rather go to a police or a local enforcement agency as opposed to a financial service provider. And then the rest of them were varying degrees of helplessness, would not know what to do, would not go anywhere, and suffer in silence. So this is the spectrum of responses that we got. And I think this is a huge indicator of the trust that people place in digital financial services at the moment. So I think for its faceless, presence-less comparative advantage, it needs to be complemented by a huge grievance redress mechanism so that people feel that there is a mechanism to hold people accountable and get their hard-earned money back. I leave that open now and go around the house and saying, what would a good grievance redress look like in digital interfaces? And is that enough to get consumers to trust us? I wouldn't want to choose panelists now. You guys can take it.
I think Abhishek had alluded earlier, so maybe he could.
I'll make 3 points. First is, my perspective is more as somebody who's part of an enterprise. It is, and from my last 13 years of experience, what I have understood is the ability that you have to create the capability to listen to every complaint, every feedback, every issue. See, everybody, in my experience, having interacted with customers, I have realized that they understand that not everything can get solved. It is very important for them to make sure that they are heard. It was, I think, 3 or 4 years ago that on our application, we made sure that there was an ability to send feedback practically at every place. And so it's very important to create mechanisms just to listen, just for them to be able to register their issue, their feedback, their complaint. That's very important. Second is that today in Echo, we are relying a lot on trying to enable these channels up to accept video, voice, and vernacular inputs. And that is extremely important. The third point is, and which is a far more important point, is that it is within enterprises, this is an aspect where we don't invest enough. And the reason we don't invest enough is because, the unit economics of processing these transactions don't allow for a lot of investments in this direction. And one very big aspect of lesser investment is that the pricing is still not free market. And the low, so a lot of things, Rajendran made this point about the usage of term beneficiary. By the way, this goes back to that the accounts were called no frills accounts. And so there is this mechanism where you're trying to paint this as, and you're trying to talk down upon this customer. You're not treating them really as customer, but as beneficiary. All of us in this panel and the audience would never want us to be treated in that manner. Who amongst us is ready to raise their hands and read out the oath which microfinance customers read out? And we will not do it simply because it impinges on our self-respect. And to assume that low-income customers don't value self-respect is extremely wrong. They are equally aspirational and they value self-respect. The only difference is that of scale. I don't see, thanks to television, I don't see that aspirations also are very different. So the 3 points is that, create more and more channels to listen, adopt more and more technologies around vernacular, video, and voice. And the third point is that we need to acknowledge the root cause of why the investment remains low. And that has to do with, a large portion of that has to do with the lack of free market pricing.
Let me just add on to what Abhishek has said. One point is it's really around the channels through which we reach out to customer. I think the video, voice, vernacular is a great thing, especially for these customer segments. At the same time, it's important to reach out to them or let them communicate to us in the channels that they typically use, right? We have startups, for example, that extensively use WhatsApp to receive customer feedback and for their communication, right? They don't expect the customer to go to their website, write an email, and this ensures that they're hearing from the customer, right? Second thing that we see the good startups do is that, like Abhishek said, relay this feedback to the team that is, let's say, building the product or delivering the product, right? Which is, let's say, involved in the design. What this does is that the feedback that is taken in, and suddenly, because they're able to work on it, the failures and the complaints also reduce, which also makes it a lot more manageable. That really is the way out for the unit economics. It is going to take some initial investment, but you're hoping that by doing that, over the longer term, the economics do work out, right? I think that is extremely important. One more thing, I think something that I've observed in startups is the best founders that I've looked at are people who regularly are on customer support calls, right? Because that is when they really understand, and those at the top, I mean, even look at CEOs, right? I mean, whenever they get involved in this, typically all the entire organization comes together to work, and they can really drive things, uh, for the benefit of the customer. So wherever we have seen the founders being quite closely involved in understanding the issues that the customers are facing, we have typically seen much better outcomes.
Yeah, I think both of them have added very important, valuable points. I'll just say a couple of more things. I think one of the things in COVID times that came through was a friend of mine who unfortunately had COVID. But what was interesting about the entire her COVID experience was that when she went to the hospital and got herself tested and it was positive, there were calls from multiple people. There were hospitals calling her, doctors from hospitals calling her, checking on her. There were psychological counselors calling her and checking on her. So although the disease itself might have been very alienating, but at the same time, the fact that the state was taking some kind of care in the sense by reaching out, and this happened in Bengal, that they felt okay. It's not all bad. There are I may be having a bad disease, but at least there is a person that I can reach out to who will assist me on what to do and the path forward. So that's a good example, I would say, to say that if it can, it shows it shows an example of what political and administrative willingness can do. And similarly, there are other many good examples from Andhra and Telangana that we've observed in our work, that when a grievance is lodged by a person, it's automatically escalated to the higher authorities, and the higher authorities call the respective worker and check whether the grievance that you registered has been settled or not. Otherwise, corrective actions have been taken. So these are some good examples that we have seen from Andhra as well. Now, coming back to specifically in terms of DBT as well, I think one of the things is this came out in, these are called the Bhilwara principles of accountability that MKSS has closely worked on, Mazdoor Kisan Shakti Sangathan. And 2-3 things that they highlight is Jankari, which is different from Suchna. Suchna is just information, but Jankari is actionable information. If I don't get something, what can I do to take relevant action as a rights holder? Then Bhagidari, which is participation of the rights holder in designing the grievance redress system as well. Then Sunwai is important, as in once I register a grievance, and again, this is something that Sandeep and Abhishek both have said, is multiple channels of registration of grievance. It need not be only by website, it need not be only online, it need not be only at a block office. If we can open up multiple channels and let the person pick whatever is the most convenient channel to register the grievance. So that would be a great way. So followed by a sunwai, which is some kind of a hearing of your registration, of your grievance. So if there are designated days in a month where officials can come to the block or the panchayat and say that, okay, I'm going to, these are the set of grievances that have come by. I'm going to hear and do a hearing of your grievances. And also you hear from me as to what action has been taken. So these, if they can be implemented, that can go a long way. Now, one of the thoughts is that CSPs, Common Service Centers, are a reality across India. If we can refashion Common Service Centers as not just a service delivery center, but also as an information facilitation and a grievance registration center. So you empower them that, okay, we will also register grievances on behalf of people who have, give them a dated receipt, and give them a concrete timeline. When we have a problem, let's say in our internet at home, we run helter-skelter. We do anything to make it work in 2 days, and we make phone calls. But that doesn't happen. And as that Abhishek rightly said, it's a question of dignity. Beyond a point, even you lose, your self-respect is at stake. So facilitation center, which can double up as a grievance registration point, can be a very powerful way. And finally, I think another thing is typically, on average, I'm not saying everywhere, but average case is the person who's running a CSE is largely an upper caste male. Even if in a panchayat, if you see that it's let's say 80% are, let's say, Dalits, and maybe 15% are Adivasis, and only 5% are upper caste people, you'll still see that the CSE is run by an upper caste male. So yeah, I'm talking about the government run common service centers. So can we think of affirmative action policies for common service centers where there are more women and people from marginalized groups who run these centers? That way, it will be easier for a person who's most backward to have the freedom to go and speak, because otherwise it's a reality. Caste system still is prevalent in rural India, especially. And have a Gram Panchayat oversight. So include the Gram Panchayat officials in designing these kind of systems where such things can happen. And technology can play a very important role in grievance redressal, because the automatic escalation, if it's not resolved in a time-bound manner, that can be automated very quickly. And higher officials, if we can create simple dashboards saying, okay, these are the grievances that are appearing in these different programs from these regions, create automated reports based on whatever data that is getting generated, and then higher officials can implement and have a strict monitoring mechanism and protocols mechanism that can go a long way.
Thanks, Rajendran. I don't think there's a big need for me to summarize after that last comments. I'll still try to do a job of it. I think this has been an amazing panel in that it has given both high-level principles as well as specifics on what can be done to operationalize them. I'll quickly summarize the three expectations, consumer expectations that I got from all of you, the challenges that we face in delivering them, and then some solutions, as I heard from all of you chime. The first expectation is that infrastructure should deliver, and it should not deliver most of the time, but it should deliver every time. I think the challenge there that we've all collectively found is that infrastructure is developed iteratively, and capacity will always, it will never be over capacity, it will always be under capacity. And therefore, the objective of delivering will get impacted. And the solutions there then are that obviously you plan for capacity of the future. You never go with just a digital only mechanism. There are alternative mechanisms. You make use of physical infrastructure that is there, and do not expand digital to the exclusion of physical infrastructure. And just borrowing from Rajendran's last point, that when we do rope in physical infrastructure to deliver financial services, then we need to see that that physical infrastructure itself is inclusive in its nature and is representative of the people it's kind of intending to serve. And the third most very important thing that I heard from all of you was that to the extent the infrastructure is technological, it should be open source, it should be auditable. And when it is audited, it should be audited in a multidisciplinary manner from participation from diverse stakeholders. And that feedback should go into iterating and developing the infrastructure further. The second expectation that we have of consumers at the last mile from responsible digital finance is to be treated with dignity. It's a little unsettling to say that we still have to articulate this expectation and that it's not obvious yet. But this is where we are, and hopefully the next session of this summit would be different. The challenge here in kind of treating people with dignity, unfortunately, is that the processes are not always designed for the most marginalized or the most low-income consumer. Some solutions that we've together collectively come out with are keeping the consumer at the center when we are designing not just the processes, but the entire cycle, starting from the back end to the error code to the consumer interface, and designing for the consumer at the last mile in that sense. Baking in dignity, which is to say that dignity should not be an afterthought, but how can you actually bake in dignity in the design of your processes and products? And then be kind of specific and alert to specifically designed for those that are excluded. So thinking that we will get there might not get us there ever. So we have to be a little more deliberate and target the excluded audience and the excluded population when we are designing products. The third big challenge that I heard from all of you in varying articulations was that the third big expectation, was that DFS needs to be accountable. This is coming from work at Dwara, where people find it hard to hold DFS accountable and therefore steer clear of DFS altogether. Also from Rajendran's work, where people, when they lose their entitlements, they don't even know whom to hold accountable and where they can get redress from. I think the challenges there are that digital processes are opaque to consumers. Consumers don't really understand where transactions have failed and what the right forums to air grievances are, because everything is new. Some solutions there are to make the processes more transparent. So let's not have error codes, but let's have one-line vernacular explanations of why the transaction has failed. Let the consumer know what the next steps are going to be at the point of the transaction itself. Let grievance be as readily available as the transaction itself. Let it be as easy to get grievance as it is to avail of the financial service to begin with. And then when we think of grievance redress, it is imperative to have multiple forums where grievances can be aired, and those multiple forums then feed into both the provider as well as the regulatory authorities, so that both have visibility on where the cracks in the system are. So I think these are the three big expectations and some solutions for how we can meet them. Until next time, this was a great panel. Thank you.
Thank you.
Thank you very
much.
much.
Thank you, Benny.